In this chapter, we'll be discussing about demand draft. Demand draft is also a negotiable instrument like checks issued by one bank that directs the other bank to pay a certain sum of money to the payee. So the parties involved here are the person writing the draft is the drawee, the bank making the payment is the drawer or the payer bank, and the beneficiary of the demand draft, the person receiving the payment is the payee. So bankers checks drafts for an amount of 50,000 above will not be paid in cash. You must have experienced this. If you have asked for, if you gone to a bank to have a draft for above 50,000, they will not take it in cash. So bankers check for amount of 50,000 above will not be paid in cash. So if you have a draft for 50,000, somebody has given you. If it is above 50,000, you cannot get it in cash. Okay, it can only credit to the pay's account. So if you taken DD for exam fees and all, you might have noticed the bank officer will sign on it. Okay, so in fact, for drafts of 50,000 above, signatures of 2 bank officers is required. And demand drafts are valid for 6 months. However, they can be revalidated. Even if 6 months is passed, you can get it revalidated. That means the date will be extended. And if the DD is lost, a duplicate drafts will be issued for amounts about 10,000. That means it will be issued on confirmation that the drawee branch will give a confirmation that they not got the payment. Okay, and also a stamped letter of indemnity will be executed with two sureties. So the bank will issue duplicate demand draft within 14 days, and for the delay in issuing duplicate draft beyond this period, bank will pay interest. So the charges are usually calculated as a percentage of the amount. So sometimes you might need to cancel the DD. So cancelling the DD has some process. So you write an application to the branch manager stating the reason for cancellation. You have to fix a revenue stamp at the back of the DD, and you put your signature partly on the stamp and partly on the demand draft. Submit the application to the branch manager, get the application stamped, and you submit that application along with DD at the cash counter. Okay, there will be some cancellation charges and the amount will be returned to you. So to understand the key differences between check and demand draft. Okay, check is issued by the customer, whereas demand draft is issued by the bank. Okay, in check payment is made after presenting the check to the bank, whereas in DD you have to first make the payment. Okay, then only you get the DD. Then check is payable either to order or bearer, whereas demand draft is always payable to order of a certain person. Checks can be dishonored for reasons like insufficient balance, whereas dishonor is not possible in case of demand draft because payment is already made. Checks are issued by customers to the bank, while bank itself issues demand draft. We've seen this. In check, drawer and payee are different persons, whereas in DD both parties are banks. Okay. Checkbook facility is available only to account holders, whereas demand draft is available both to account holders and non-account holders. The purpose of the check is to make payment in a safe and easy mode, whereas the purpose of demand draft is to transfer money from one place to another. Check needs signature to transfer amount, whereas DD does not require any signature. Payment of check can be stopped by drawee, whereas payment cannot be stopped in DD. Sometimes you hear the term pay order. It's same as DD, except that while demand draft is an order, written order directing the payment to be made to a third party outside your city, pay order is usually the third party is within your city. That is the only difference. Okay, pay order are printed with not negotiable. Okay, whereas demand draft is a negotiable instrument. And both DD and pay order are secure mode of transfer of money to third parties. Many schools and colleges, you might have experienced this. They prefer these instruments because there's no possibility of bouncing. Because if you give a check, it because of funds, insufficient funds, or some other reason, it can get bounced. Okay, whereas demand draft is more secure. Okay, that's why most colleges, for payment of fees and other purposes, they insist on demand draft or pay order. But compared to RTGS NEFT transfer, DD is expensive. Okay, because NEFT transfer will cost you like 2 rupees 50 paise, whereas demand draft may cost you, depending on the amount, okay, like 50 rupees or so. But still many colleges insist on this. So below here we are showing an image of a sample DD. This is how a DD looks. You might have seen this DD many times. Okay. So in this chapter, the questions will be better. What is demand draft? In a demand draft transaction, who are the drawer, drawee, beneficiary, payee? What is the maximum amount up to which demand drafts can be issued by cash? How many officers have to sign on the demand drafts above 50,000? That is 2. For how many months a demand draft is valid? Can duplicate DD be issued? Yes. What is the process we have seen? What is the difference between check and demand draft? Very important question. What is pay order? Which is cheaper, payment by DD or payment transfer by NEFT? Usually NEFT transfer is very cheap.